The stock market just bled out. And if you are not watching what that did to gold and the dollar right now, you are already behind. Here's the deal. When equities dump hard, institutional money does not just vanish into thin air. It flows somewhere. And historically, the two biggest magnets during a risk-off panic are the US dollar and gold. That is exactly what we are seeing heading into May 27. The S&P 500 has been under serious pressure, and every time that happens, the dollar index starts climbing. Why? Because global investors need a parking lot for their capital, and U.S. treasuries denominated in dollars remain the default safe haven, so the dollar strengthens. Now, here's where it gets interesting for Forex traders. When the dollar surges, Forex majors get crushed on the other side. Your USD drops, GBP USD drops, AUD USD, which is already sensitive to risk sentiment, gets hit even harder. If you are trading any of these pairs on Exness right now, you need to understand that this is not random price action. This is macro flow. Big money moving from risk assets into safety. And gold is the other side of that coin. XAUUSD has been ripping higher because gold serves a dual purpose in a crash. It is a safe haven and it is an inflation hedge. When stock markets fall, central banks start hinting at rate cuts or at least pausing hikes, and that expectation alone sends gold flying. We saw XAUUSD push through key resistance and the momentum is not slowing down. Now, what about crypto? Bitcoin likes to pretend it is digital gold, but during acute stock sell-offs, it still trades like a risk asset. We saw BTC drop alongside equities in the initial panic. However, and this is the nuance, the recovery in BTC has been faster than previous cycles. So there is a divergence building. Stocks down, dollar up, gold up, and BTC trying to find its own path somewhere in between. For your trading on May 27, here is what matters. Watch the dollar index as your lead indicator. If DXY keeps climbing, expect continued pressure on Forex majors and support for gold. If equities stabilize and DXY pulls back, that is your signal that risk appetite is returning, and you might see a reversal in pairs like AUD, USD, and a pullback in gold. The key is not to guess. It is to follow the flow. Set your alerts on Exness, track the correlations, and let the institutions tell you where the money is going. Open your Exness demo or live account today and start mapping these safe haven flows for yourself. That is how you stay ahead of the crash.